Lululemon stock is down nearly 70% from its highs, but while Nike dominates the spotlight, Lululemon might actually be the better play. And to show you why, I've created a 10-year forecast for revenue and free cash flow, and my fair value comes in at $223 per share, suggesting that the stock is around 19% undervalued and also implying an estimated annual return of 20%. In this video, I'll break down what makes Lululemon such a standout company and go through both the bull and bear case to see if it deserves a spot in your portfolio. So yeah, let's jump in. Now let's start off by taking a quick snapshot of Lululemon's most recent fiscal year. We can see that revenue grew by 10% and EBITDA grew by 14%, so the company is becoming actually much more profitable at the same time. Now EBITDA is around 28%, that's absolutely massive for a retail stock. Now the stock price is around $180, that's down 40% over the past year, and the company is of course headquartered in Vancouver in Canada. Now unlike traditional sportswear brands, Lululemon has built its brand on community, lifestyle and premium quality. The company started with yoga wear but has expanded into men's apparel and footwear. Now what's really impressive is its direct-to-consumer model, which now represents over 40% of total revenue. That gives the company higher margins and full control over its customer experience. And to better highlight my point of how profitable Lululemon actually is, what do you think is Lululemon's approximate gross margin? Now, the gross margin is the percentage of revenue that remains after the company subtracts the direct costs of producing its goods and services. Is it A, 35%? Is it B, 57%? Or is it C, 70%? And the right answer is 57%, which is absolutely massive for a retail company like Lululemon. And this is also higher than, for instance, Apple and AMD. Now, on top of profitability, international growth is also ramping up fast. Asia and Europe remain huge untapped markets, and Lululemon continues to post double-digit revenue growth outside of the US, something even Nike can't match. However, growth in the US, its core market, has slowed, which has made some investors worried. Still, with consistent profitability, high brand loyalty and a premium customer base, Lululemon stands out as a rare mix of growth and resilience in the retail sector. Now, the bull case, in my opinion, is quite clear. First, we have premium brand power. Lululemon's strong pricing power and loyal customer base give it one of the best margins in the apparel industry. Then we also have international and men's growth. Both segments are growing faster than its core women's business. Now, we also have a bear case as well. First, we have brand saturation risk. As Lululemon expands product lines, it risks diluting its premium image, and also we have competition. Nike, Adidas and newer entrants are all ramping up in the athleisure space. Sustaining brand differentiation won't be easy for Lululemon. Okay, so now we have a sense of what makes Lululemon so unique as a company. Let's move on and take a look at some historical financial data going back all the way to 2021. And here we have the core financial performance. We can see the revenue in blue and we can also see the EBITDA in green. Now the important takeaway here is that not only has revenue grown by 25% on average per year in the past 5 years, and so has EBITDA as well at a higher pace of 31% per year. Now this has also been reflected in the EBITDA margin. The company is not only growing its revenue, but it's also becoming much more profitable at the same time. Now, whenever I consider adding a stock to my portfolio, I also like to take a look at the debt sustainability to see if that is any risk for us as investors. Now, here we can see the debt in purple, and we can also see the excess cash in green, and the picture is quite clear, right? We can see that the company can quite easily pay down all of its debt with its excess cash today, showing that that is no risk for us as investors going into the stock today. Now, as you later on will use the free cash flow in the valuation part, let's also take a look at the historical free cash flow performance of Lululemon going back 5 years in time. Now here we can see again revenue in blue, and instead of EBITDA we can see the free cash flow to equity in green. So that's the relevant free cash flow for us as equity investors. Now we can see again revenue has grown by 25% per year and free cash flow grown by 29% per year, showing us again that the company is becoming much more profitable also on a free cash flow basis. And here you can see the final chart I have to show you, and it's the share performance of Lululemon. Now we can see the shares across two dimensions. First we can see the green dotted line, that's the average yearly price, and we can see the blue columns, that's the shares outstanding within the company in millions. Now the take here is twofold. First of all, we can see that the share price is lower today than it was in 2021, at the same time as free cash flow has grown by 30% per year, showing us that the company on a valuation basis is much more attractive today than it was 5 years ago. In addition, the company has also bought back stock, reducing the share count down to 121 million shares, which is another great sign for us as investors. Okay, now we have taken a closer look at Lululemon's historical financial performance. Now let's move on to the exciting part, which of course is the valuation part. And I'll start off by showing you all my assumptions that have gone into my bull case valuation just for full transparency, and these assumptions go all the way up to 2035. And starting off with revenue growth, here I'm assuming average yearly revenue growth of 5%. That's much lower than the 25% we've seen in the past 5 years, as we've seen growth decelerate in the past few quarters. Now in terms of EBITDA margin, here I'm assuming 28%, so that's slightly higher right than the average we've seen in the past 5 years. And in terms of enterprise value to EBITDA multiple, I'm assuming just 10 times. That's a much lower multiple than in the past 5 years. We've seen 26 times on average per year. Now in terms of free cash flow growth, here I'm assuming average yearly growth rate of 6%. That's of course also lower than the 29% we've seen on average. Now in terms of free cash flow yield, I'm assuming 5%. That's also much higher right than the 2.2% we've seen in the past 5 years. And finally, the discount rate I've used for my discounted cash flow analysis is around 10.6%, which I believe is quite reasonable for a company like Lululemon. And yeah, here you can see all the growth rates I'm assuming for both revenue and free cash flow all the way up to 2035, which of course is Lululemon's fiscal 2034. Now important to note is that I'm assuming revenue growth to top out at around 7% and free cash flow growth to top out at around 9% in 2029 before both growth rates decelerate down to 4% in 2035. Now these growth rates are of course much lower than the company has performed in the past 5 years, but they are in line with their current growth rates. So basically staying conservative and not assuming any huge acceleration of growth for Lululemon in the coming years. Now if we discount all the future free cash flows in my model, which I also believe are quite conservative, we get a fair share price of today at around $223 per share. This also shows us that the current share price could be trading at a 19% discount and that we as investors could get 20% annual compound return in the coming 10 years from the stock. And this annual return of course also easily beats the S&P 500 at around 9 to 10% per year. Now here you can see how it might look if everything goes according to plan in my bullish valuation. Now we as investors of course have to invest in the stock today. That's negative free cash flow for us. Of course we get some free cash flow in 2026 as well and all the way up to 2035. These may be as buybacks or as dividends, but we can see in 2035 we have to sell the stock, right? And that's where the majority of our total gains will come from. So it's basically the total gains relative to our initial investment of today that gives us the 20% annual compound return that we could potentially expect from the stock in the coming 10 years. Now let's also quickly compare Lululemon's valuation to my latest valuation estimates for Nike. In this case I have the stock at a discount of 11%. That's a smaller discount than Lululemon, and the annual expected compound return at only 18%, which of course is also lower than the 20% I have for Lululemon. It seems that Lululemon might be a slightly better investment opportunity if you are interested in comparing the two and deciding which one you want in your portfolio. Now of course the assumptions in my bull case assumes optimistic assumptions for revenue growth and free cash flow, but let's also take a look at the bear case scenario and see how bad it could get for us investors if the company doesn't even perform in line with our bull case assumptions. So for the bear case I'm assuming revenue growth at around 2% and free cash flow growth at around only 1% per year on average. And if that's the case, our fair share price drops down to $155 per share. This also shows us that then the stock is trading at a 17% premium and the annual return drops down to 7% per year. I believe that the bear case assumptions are way too conservative, but if that's the case we can still expect 7% per year, which is a negative for us as investors. Now if the bull case actually materializes, then we can get 20% per year. I think this is a good trade-off and opportunity for investors that are optimistic around Lululemon as a company. Now let's also take a quick look and see how Lululemon compares to other stocks I've talked about on my channel. And here we have an investment positioning landscape where we have the undervalued stocks at the top and the great businesses to the right. So we want stocks that are up to the right in this matrix. And I'd actually place Lululemon over here, right? I think it's still a great business, of definitely a better company than Nike in my opinion. At the same time, it's also much more undervalued than Nike, which I talked about earlier. So in my opinion, it's a more attractive investment opportunity relative to Nike and some other companies as well if you're bullish around Lululemon. Now the question then is, what makes a great stock? Well, in my opinion, it's not only that it's a great business and that it's also well priced in the market, it needs a third element as well, which I call momentum. So let's take a quick look and see if Lululemon has any technical momentum today. And here we can see the stock price of Lululemon going back a few years, and we can see basically that stock does not have any momentum at all as of today. We can see that stock price is down close to 70% from its highs back in December of 2023. Now, if we also zoom in a bit, we can see that stock price is well below this blue line here, right? That's the 200-day moving average. Usually we like to buy stocks that are above the 200-day moving average, or when it's about to cross above. Now, if you feel brave and bullish around Lululemon, then this might be an excellent price to start nibbling at the few shares. However, if you're feeling more cautious and would like to stay conservative, then I'd wait until the stock regains its momentum. For instance, when the stock price is above its 200-day moving average. But then, of course, you run the risk at buying the stock at a much higher price. And here you can see what happens to the annual expected compound return if the stock price declines, which is good for us as new investors, or if the stock price increases. Now, we are at around 20% today. That's really strong in my opinion. However, if the stock would go down by 10 or 20%, then you could get 22 or 25% annual returns. If the stock price increases, then the annual expected return of course drops. So it's all dependent on where you as an investor feel comfortable entering the stock. Now, given the discount the stock is trading at today, I've given the stock a buy recommendation and 4 out of 5 stars as my final rating. And yeah, here you can see all the key considerations behind my final rating. We can see that the company has scored really well across the financial performance, and the valuation is really attractive in my opinion. However, the stock really hasn't been that consistent right in the past few years. In addition, I've also given the company a low score in terms of low legal and macro risks. Lululemon of course produces physical goods outside of the US, which of course are exposed to tariffs, which is a risk we as investors need to keep in mind of when investing in Lululemon. However, if you believe that these macro risks are temporary and that Lululemon can slightly accelerate its revenue growth again, then this might be an amazing buying opportunity for new investors. Thank you so much for watching this video. If you found it informative, please feel free to like and subscribe. So yeah, thank you, and I'll see you in the next one.